Hello and welcome to Edison TV. Today I'm joined by John Davis, Chief Executive Officer at Cordel. Cordel is a rail technology company that uses advanced data capture and AI to monitor rail transport corridors, improving efficiency and safety. John, many thanks for joining me today.
Thank you, Dan.
Can we start by looking at recent deal flow? You've announced a lot of deals recently, a real step change in the amount of deals that have come in. Can you discuss those, but also what's driving that change in momentum?
Yeah, well, as you know, our industry sees some pretty long sales cycles, and that's been one of the challenges for Cordel over the last handful of years. And really what we've seen in this last few months has been a huge amount of work delivering on these big deals and bringing them to fruition. I think that's partly about timing. We sort of thought we'd be further forward by the half year, but actually it's just taken a little bit longer. But I think what we are seeing is real positive momentum in our three core markets. And I think in the UK, that's partly driven by the huge amount of data we've captured there, the approvals that we've earned in that market, and the reputation that we've built because of that. In Australia, I think that's quite a lot to do with the relationships we've built there and the local presence we have in the market. And I think in the US, which probably has been the slowest and most challenging for us, it's partly about a bigger team that's allowing us to build deeper relationships with our existing clients and potential clients. And I think the visualization work we've done, the improvement in our product, is really landing well there.
So can you run through the key highlights in terms of the deals you won?
Yes, so since the half year, I think there have been 5 really important steps for the business. The first was to win a POC with another Class 1 in the States, which we're really excited about, and is already leading us to get more POs out of that particular customer that we'll talk about in the near future. The second would be a change in the Genesee and Wyoming, the G&W arrangement that we have to be on a recurring revenue basis. And then very quickly after that, we won another bit of mileage with G&W in their Canada region. The one that followed that was the extension into the district line for TfL, and again, sort of proof that what we did for them last year really worked for them, and there's more to come there, I think, as we look into FY27. And then the final one, the biggest one, was the Network Rail refresh of their gauging data, which is a really significant project for us, £3 million through to the end of calendar year 2027.
Great. And you obviously had a slow first half, and now you've seen the pickup. Can you talk about the financial implications of that?
Yes. So we were really disappointed with our first half results, and the market certainly saw that, and we had some difficult conversations with investors back in February. But even then, I think we felt like this was just a matter of timing, and that we would get those deals to come to close relatively quickly. I think it's great now that we are seeing the evidence of that and able to talk to the market about that, and I think it gets us back into a really pretty strong position for FY26, and almost more interestingly, an even better position for FY27. I think the quality of the wins is significant, and the effect that that's having on long-term annual recurring revenue is also very significant. And both those things we feel really optimistic about.
Yeah, certainly looks as if maybe estimates have gone from the estimates risk has swung from the downside to the upside. Tell us about the pipeline. How's that looking at the moment?
Yeah, so the pipeline's really improved significantly, particularly over the last year. So we have more than £70 million of pipeline opportunity that we are looking at today with named clients. So this is people we're either in real negotiations with, late stage negotiations, or indeed people a little bit earlier, but all named clients. And that is more than double where we were 12 months ago. So it's been a significant uplift, partly driven by a sort of larger team in the US, but also I think partly because of this reputational and product improvements that we've talked about previously. What also we feel really optimistic about is what we take into FY27. So I think we can look at our revenue targets for FY27 and feel like more than 50% of that feels pretty much in the bag for the year. And that gives us a really great foundation stone as we look at the next 12 to 18 months.
And can we turn to North America? You've been making good progress with PTC, positive train control, but also started to move into Canada through your clients there. Can you just discuss the key highlights in North America?
Yes, so we increased the size of the team in North America at the very end of our last financial year, FY25. And I think we probably expected that to lead to more rapid results than we've seen. It's taken quite a while for that to bed in and to drive some progress in the market. However, having said that, I think with our key relationships with Amtrak, with G&W and with 2 other Class 1 railroads in the States, we really can see the benefit of having that larger team and the opportunities that's creating across a number of our different use cases. So not only in clearances, which tends to be our headline use case, but also in ballast, in vegetation, in PTC, as you were mentioning. PTC feels really interesting and exciting still, but I think it's just taking a little longer to commercialize than we had hoped. We will deliver some revenue from PTC in this financial year, but I think the significant revenue will come in FY27. But what I was really excited to see earlier this week is the first time we've had our own AI model using third-party data and giving us some really exciting results in terms of how that maps to the existing PTC assets that these Class 1 railroads have. So I think what we are now really confident about is we have a very, very compelling proposition. It's just now getting it to the point where our customers are ready to spend money with us.
And looking at the UK, you've recently announced a big, larger deal with Network Rail. Can you talk about, talk about that deal, talk about the implications of it, and long term, what does that mean for Cordel?
Yeah, so Network Rail is a really interesting beast to work with. They're actually extremely exacting about what they want to do. So we always feel, both with the approvals and then when you win a deal like this, that you've really sort of proved yourself at the really fiery end of the market. This is a significant deal for us. It's worth £3 million guaranteed through to the end of calendar year 2027, with a potential to extend that for a further year at another £1.3 million. And it's all about updating the gauging data in the database that we run for Network Rail to make sure that it's fully up to date and compliant with their standards. It actually, I think, also leaves us in a great place for the infrastructure monitoring project that's coming down the line, because I think it proves to the market, to Network Rail, that we are really effective in gathering data, analysing that data, and then producing it back to them in a format that works for them.
So that infrastructure monitoring project, that's essentially moving to ongoing monitoring rather than sort of in batch. Is that correct?
Well, yes, it's a range of things. It's a £1.8 billion project, so it goes way beyond the data services that we provide, and actually will be a full replacement for the yellow fleet. But within that 1.8 billion is a requirement for about 18 data delivery services, of which we believe we are in the box seat to win roughly half of those. And this, exactly as you described, that will just be a more meaningful ongoing project to keep that data up to date across a whole range of different use cases.
Right. And you've recently made inroads into underground. Can you discuss that? And also, what should we think about that incremental opportunity in terms of what that opens up for you?
Yeah, sure. So yes, we've been working with TfL. We've just got an extension project with them. So initially we did the central line. Now we're looking at the district line. We've really made a step change in what we're able to do in GPS denied arenas. And that has been a very important unlock for us in the tunnel world. So certainly within the UK, we see this as another significant customer opportunity, a sort of £1 million a year opportunity, potentially, as we move forward. I think as we look into the US, where we are doing some work with Amtrak on this particular challenge, it's hard to quantify precisely, but it might be something akin to half what we see in the PTC opportunity. So maybe a $2 to $5 million opportunity each year. And then obviously we haven't really looked beyond those two markets at this point. So we're really excited about what's possible in tunnels.
Yeah, can we turn to product innovation? You've recently launched Cordel V3. Can you discuss the key innovations in that and what that opens up for you?
Yeah, so Connect V3 has been a really important step for us. There's been a lot of work going on in our Newcastle office in Australia to really develop the visualization aspects of that product. And that's something that I think has been particularly effective with our US customers. There's a real wow factor now to that I think is quite different from where we were even, let's say, 6 to 9 months ago. There's also been some real progress made there in terms of where we're pulling data from and how effectively our multimodal approach works. So that's the use of both video and LiDAR to create something which is doubly effective for our customers. And I think what we're also seeing is with work in the underground space, with work on the PTC space, really understanding better how to identify a whole range of trackside assets. It's just deepening the quality of what we have to offer in Cordel Connect 3. And that, as you were rightly saying, the kind of symbiotic benefits you get of working in one area and bringing it to another is something that's really effective for us. And one example of that actually has been work we've been doing with Amtrak in the States has now come back into the work we're doing with Network Rail as part of this new large contract. And that's where I think we really see the economies of scale kicking in.
And so what should we look out for Cordel over the next 12, 18 months? What are the key milestones we should keep an eye out for?
Yeah, so obviously we've been delighted with the recent momentum on customer deal wins. I'm pretty confident that doesn't stop here. We've got a number of things that are very close to coming to close in the next handful of months. So certainly before the end of our financial year, I would hope to see 2 or 3 more announcements out. And then clearly as we look into FY27, as I said, we have a really great foundation stone in terms of ARR, but I also think that there are some exciting opportunities to extend some of our existing contracts. So some of the names that are already familiar, I think we're seeing them partly because of this new, better visualization, we're seeing them interested in a whole range of different things that we have to offer. And that sense of land and expand has been something we've talked about for many years, and it will be great to be able to show the market that is truly coming to pass.
So it's great to see Cordel starting to benefit from those network effects with a wider customer base, more expansive product set, starting to pull through. John, many thanks for joining me today.
Pleasure. Thanks ever so much.